Welcome, everyone. Today's section is the ethics section that we're going to talk about under Circular 230. My name is Roman Basie. As you see here on this first slide, I'm the president of the Center for Financial, Legal, and Tax Planning. If you've taken this course before and you've seen my presentation of the ethics section, you'll notice something different on my front slide today. I am now a certified public accountant. I'm also an attorney at law, a real estate broker, and a title insurance agent. I've had a lot of experience within the ethics section of the Internal Revenue Code and within Circular 230, as we're going to discuss today. I've represented practitioners, I've represented professionals, I've represented lay people, business owners in front of the IRS and in the practice in front of the IRS. One of the most important things that you should do as we begin this course today is to print Circular 230. You can print it out right from the internet, or we'll provide it as well. Go to irs.gov, search Circular 230, and print it out. We are going to go through this section today, section by section. While we won't cover every paragraph within there, we're going to read some and dive into some. And I think it's important that you know where to find it, how to print it, and what it contains, because that governs the ethics that govern you, the tax practitioner. It's also important to understand that today we're talking about the AFSP, the Annual Filing Season Program, and we're going to get to what that means and the changes of what that brings to our practice in this year. So let's take a look. I'm on slide 2. Some clarification as it relates to Circular 230. Look at the first line. IRS Circular 230 was last revised in 2014. In fact, it was published on June 12th, 2014. Now, you're taking this course for the 2017 filing year during 2018. So you have to look back and say, okay, everything relates back to 2014 as it relates to ethics under Circular 230. Keep that in mind when you're looking over this. Also, Circular 230 uses the term Registered Tax Return Preparer. Now, as you should know, and as you will soon find out, that term no longer exists because of court cases that came down after this document was published. However, the IRS has not updated the Circular 230 since they ceased using that name, Registered Tax Return Preparer. And that is because of a federal court case of Loving versus the Tax Commissioner. And I have a slide on that in a minute that we will discuss. So now we refer to this, and it's referred to by the IRS as the AFSP Record of Completion Holder, Annual Filing Season Program, Record of Completion Holder. We will try to use Federal Tax Return Preparer for reference today, although you may see me slip once or twice and still call it the Registered Tax Return Preparer, because in the Circular 230, it's still referred to as the Registered Tax Return Preparer. We are waiting any day for an update to Circular 230. It's just not coming soon enough. So what are we going to cover? What is Circular 230? And what are we going to cover? Take a look at the very first section, which is section 10.0. Now first, if you have the 230 in front of you, skip through the table of contents, and then there's 31 USC 330 to skip through. Then you get to section 10.0, which is the first section. And take a look at the scope of that part and what this means. It contains the rules governing the recognition of attorneys, of CPAs, certified public accountants, enrolled agents, enrolled retirement plan agents. Now look in brackets, Federal Tax Return Preparers. So we've bracketed the new language, and that's how you'll refer to it today throughout this course. And other persons representing taxpayers before the Internal Revenue Service. So that's a very important sentence. It governs others, not just you, not just professionals, anyone that's representing a taxpayer before the Internal Revenue Service. And we're going to define what it means to represent someone in front of the Internal Revenue Service and who you could be. There's several subparts to Circular 230. Subpart A sets forth the rules relating to the authority to practice before the Internal Revenue Service. Subpart B prescribes the duties and the restrictions relating to the practice. Moving on, I'm on slide 4 and taking a look at the different subparts. Subpart C is going to prescribe the sanctions for violating the regulations. Subpart D is going to contain the rules applicable to the disciplinary proceedings. Unfortunately, this is where I get involved the most, is when there is a disciplinary proceeding, because so many of you out there and so many of the professionals out there are doing what you're trained to do. You're doing what you've been taught to do and what your experience leads you to do. And then a problem creeps up. That's typically when my office gets the phone call to say, Roman, how do I deal with this disciplinary proceeding? How do I deal with this penalty that my client received based on the tax return that was filed? And then we'll walk through Subpart D with you. Subpart E contains the general provisions relating to the availability of official records. This is very important too. You have to know when you have to make a record available and when you don't have to make a record available. Again, all of this is contained in that Section 10. So what are we covering of Circular 230 today? As we've said in years past, in 2017, we're covering all of Circular 230. These days, with the way that the AFSP is put together, you really get your money's worth when it comes to ethics. And I think it's important for you to know that while you're here and you're sitting through 2 hours of ethics to be part of this filing program, most of us as attorneys and CPAs, we have an ethics requirement that we have to follow every year. Typically, it's 3 to 6 hours every couple of years. So while you're receiving 2 hours a year of ethics, that's pretty good given the program that you're presented with. And again, take a look. Are there updates based on final regulations to 31 CFR 10? That's the Code of Federal Regulation designation. So if you type that up, that should pop up the Circular 230. And again, we talked about the effective date. It's effective June 12th, 2014. Why do I put so much emphasis on that? Because if that were to change, or there were to be updates issued to that, you have to become aware of those. Ignorance of the law is no defense. So if we get an update to Circular 230, it's very important that you know, hey, that was after June 12th, 2014. Roman told me I need to make sure I look at that and I look at those updates. So keep that in mind as well. So you bring up the question, isn't the registered tax return preparer requirement illusory now? Let's get a little of the history of why you're here and why you have to know the ethics involved. On January 18th of 2013, the U.S. District Court for the District of Columbia struck down the IRS's Registered Tax Return Preparer Program. That was the official name. They enjoined it, meaning they stopped the IRS from enforcing those regulations. And take a look at the next bullet point. On February 14th, 2014, it was affirmed by the U.S. District Court of Appeals because it had been appealed to the District Court. That case came from one of you, one of the federal tax return preparers in the city of Chicago, as well as 2 other locations, brought suit against the IRS to make this program what it is, the AFSP now. It's important to point out that the ruling only applied to registered tax return preparers, the official name at the time. It did not apply, of course, to attorneys, CPAs, as you'll see, enrolled agents, enrolled retirement plan agents, and others representing people in front of the Internal Revenue Service. So, since 2014, the IRS came up with its own voluntary program in order to protect the public from non-informed and potentially dangerous or fraudulent tax return preparers. I brought this up in last year's program as well as in previous programs that I've given as well. When the IRS came in and they said, we can't enforce this registered tax return program, so we're going to have this annual filing season program. This is very important. They had to come up with a way to enforce compliance with their ethics and with the Internal Revenue Code as it sits outside of the program. And what they did was they stepped up compliance. Specifically, and we'll talk about it throughout today's 2 hours of ethics, they stepped up Section 6694A and 6694B compliance. And take a look at both of those sections of the Internal Revenue Code. They are specifically for people giving tax advice, helping with tax returns, whether they're doing things knowingly, willfully, recklessly. Those are the sections that they stepped up compliance in as a result of this court case scenario that you see in front of you right now. And again, we're on slide 7. I'm still talking about the case history involved. And the case was cited as Loving, and I give you the district court citation. And I give you the next citation, which is the appellate court citation. So further review of the Loving decision was declined by the Supreme Court. And so it died with the appellate court, and that is the last decision that we will have. Take a look at the third bullet point on this slide 7 and look at the consent to Circular 230 restrictions. As a prerequisite to receiving a record of completion, an individual will be required to consent to the duties and restrictions relating to practice before the IRS in Subpart B and Section 10.51 of Circular 230. So you are required to consent to these duties. You're required to comply with everything that's in Section 230, whether you understand it, whether you know it or not. It's in here. You have to comply with it. If you get yourself into a situation where you're being asked to not comply with it, for example, a taxpayer, as you'll see later on, asks you to sign the back of their check, their refund check, as partial payment for your services. As you'll see, that's not in compliance with Section 230, and you've been required to consent to comply with Section 230. You will be put into situations where you have to rely on 230 and tell your clients, I cannot. The ethics code that the IRS requires me to follow will not allow me to do that. I'm sorry, I cannot do that. So let's take a look at the outline of today's program. So phase 1, we're going to look at sections 10 to 10.3. We've already looked at 10.0. Phase 2, we're going to go up to 10.20. Phase 3, we will go from 10.22 to 10.29. And then phase 4, we will go from 10.30 through the 10.5s and the conclusion of that. So let's take a look at section 10.0 as it sits. The scope of authority under circular number 230. And I'm on slide 9 right now. And this applies to, look who it applies to. We've already made mention of all of these individuals. Attorneys, certified public accountants, otherwise known as CPAs, enrolled agents, enrolled retirement plan agents, most of you listening in today, and other persons representing taxpayers before the Internal Revenue Service. I have a note here. Who would be an other person representing a taxpayer before the IRS if they're not a federal tax return preparer? My note says someone that has a power of attorney. The IRS has a power of attorney form. Someone can give another person a power of attorney to speak for them in front of the IRS. That person that accepts that power of attorney is this final category, an other person representing a taxpayer before the IRS. Before I was an attorney, many, many years ago now, I would sign power of attorneys for clients as a federal tax return preparer and as a tax professional. So those individuals are governed under this scope of authority under 10.0. Moving on, and we skip, as you see, we're moving on. We're on slide 10, and now we're on section 10.2, but I don't want you to miss out on section 10.1. So that's why I want you to have the Circular 230 in front of you. The Circular 230 establishes the different offices that the commissioner creates to enforce 230. And the most important office that the commissioner establishes is the Office of Professional Responsibility. If something goes wrong and you violate some provision of Circular 230, there could be review by the Office of Professional Responsibility. It's important to understand that's governed under Section 10.1. But let's go ahead. We're on Section 10.2. I'm on slide 10. This is where we see the definition of an attorney, a CPA, who the commissioner is, and what it means to practice before the Internal Revenue Service, as your slide is indicating here. Look at the definition of practicing. It's all matters connected with a presentation to the Internal Revenue Service or any of its officers or employees which relate to a taxpayer's rights, privileges, or liabilities under laws or regulations administered by the IRS. So there are several definitions in Section 10.2. So if you have a question of whether what you're trying to do is practicing before the IRS, and the preparation of a federal tax return is practice before the IRS. But I want to give you a couple of other examples as well. In the recent past, we've had an IRS agent walk into one of our client facilities. They called us and said, "Hey, Roman, can you come over here? Agent Smith has just walked in and wanted to ask us some additional questions." Now, if I go over there and I sit there and I help them answer their questions or I guide them through some of that, that's practicing before the Internal Revenue Service. Just the other day, we had an Internal Revenue Service agent call our office. Now, we all have seen the ads. The IRS does not call you directly. Well, we just proved that false about 2 weeks ago. We had the IRS call our office asking for an address for one of our clients. Thinking that the phone call was a sham, we didn't answer the phone call. We told them, "Look, you'll have to send us something in writing. You're not supposed to be contacting directly to us without some form of representation." Come to find out, the phone call was regarding the proper address for what they call a third-party subpoena that they were sending to our client to answer questions about a third party. So the call ended up being legitimate, but my answer to the initial phone call, my response to the written request, that's practice before the Internal Revenue Service. It relates to a taxpayer right, privilege, or potential, in this case, a potential liability. The IRS was asking, what did you pay this third-party claimant? And we're sending you a subpoena for that documentation. So I want you to be aware of how tricky you can fall into this little gap of, not only did I do the federal tax return, I assisted with that, I've now slipped into this little bucket of practicing in front of the IRS additionally on this matter. So it's very important. We're staying on Section 10.2, and we're looking at some of the examples and what it means to be presenting something in front of the IRS. So look at the list that we've created. I'm on slide 11, and it's not limited to this list. Preparing documents or filing documents, just sending a document to the IRS is practice in front of the IRS. Corresponding and communicating with them, as I said, the phone call with the IRS or things of that nature. Rendering written advice with respect to any entity at all, a transaction, a plan or an arrangement, or an other plan or arrangement having a potential for tax avoidance or evasion, and representing a client at conferences, hearings, and meetings. I want to give you 2 examples here. Actually, last week, I had one of the attendees of this program call me and said, "Roman, my client sold their practice. I'm helping them revise their 2014 tax return. I need to know what to do to make sure that this is proper, what they're doing, how they're doing it, and can we do something any other way?" That person that made that phone call to me did the right thing, because that was possibly the second to last bullet point there. It's an other plan or arrangement having a potential to try to avoid a tax. Not evade, try to minimize the tax, try to avoid the tax. That is practice before the Internal Revenue Service, something that some people are limited to doing. And by contacting like they did, they kept that practice before the Internal Revenue Service with me instead of them as the federal tax return preparer. I also want to give you another example. As far as it relates to rendering written advice, had a certified public accountant call our office a couple of years ago. I've used this example a couple of times during this program, and I'm going to use it today a couple of times as well. We had a certified public accountant contact our office. He represented a client. The client had started a business, put money into the business, $100,000, $200,000, to start the company. As the years went by, the company made money. It came time to take some of that money out of the company. When they took the money out of the company, the CPA told the client, well, let's report the initial deposit as a loan, and now you're taking out your loan. And therefore, you don't have to pay taxes on the money that you receive, rendering advice to the entity and to the taxpayer. And the IRS came in and said, no, that advice is improper. There was no loan to begin with. Several years have gone by. This money that you're now withdrawing is income to you. You have to report the income to the tune of about $30,000 in taxes, penalties, and interest. On top of that, we are now going to file a 6694B penalty against the certified public accountant for the advice that they gave you. Certified public accountant called me. We looked at what it means to practice before the Internal Revenue Service, and we said, you know what? Your giving of that advice to say to the client, it's a loan, it's not income, whether or not you had anything to do with the tax returns back when they started the company, that is practice before the service, and the Internal Revenue Service can go after you under their penalty provisions. We did get lucky in that situation. There was an attorney involved as well. What the IRS was asking the CPA to do was going above and beyond what a CPA's authority is, and asking the CPA to write a loan document and make sure a loan document is there. That's the practice of law. And so we were able to negotiate with the IRS and tell them, look, the CPA would have never done some of the stuff that you required to be done. That would have been the attorney's duties, and therefore let's lessen the penalty. Very important here, because he was practicing in front of the Internal Revenue Service. And by lessening the penalty, which we'll talk about later, but we went from a 6694B penalty to a 6694A penalty. That dropped the penalty from $5,000 down to $1,000, and did not have a referral to the Office of Professional Responsibility. Had there been a referral of it to OPR, the CPA could have potentially lost their license. So we saved the license, and we saved the client about $4,000. We couldn't fix the taxpayer situation, but that's what it means, and that's how quickly you can find yourself practicing before the Internal Revenue Service outside of what? Outside of preparing a federal tax return. So now we're on section 10.3, and I'm on slide 12. Who may practice in front of the Internal Revenue Service? Again, attorneys, CPAs, enrolled agents. Now look, there's 3 of them that have a little star behind them. And of course, we still show the federal tax return preparer with a star, 18 years old or older, and an exam required. And again, why do we show that star? It's because Circular 230 requires it. It still has that language in there. And other state and governmental employees. And here's what they say, especially for attorneys. I wanted to read this. The attorney can practice if they're not suspended or disbarred from the Internal Revenue Service, and they must file a written declaration that they are qualified as an attorney and authorized to represent the party or parties. A CPA must file the written declaration that they are authorized to represent the parties and that they are in good standing in the certain state that they are. When I want to represent a party as an attorney, I fill out a power of attorney form, power of attorney 2848. I tell them what states I'm licensed in, and I tell them that I'm in good standing in all of those states. It's very important because an enrolled agent and an enrolled retirement plan agent, there's no written declaration required. And why is that? Because you're governed by the IRS. They can look you up and say, oh, Roman is active with us and in good standing. As an attorney, they can't do that. They have to contact Illinois, Florida, Arizona, Missouri, whatever state I may be licensed in at the time, and find out, am I in good standing? But for the others and yourselves that are part of an IRS program, governed and licensed by the IRS, they already have that information. They don't have to research that any further. Let's take a look now still on section 10.3, and this is very important. We're looking at the limits on practice to the federal tax return preparer. Practice as a preparer is limited to preparing and signing a tax return and a claim for refund or other document for submission to the Internal Revenue Service. You may prepare all or substantially all of a tax return or a claim for refund. And I've highlighted the second part of it where it says the Internal Revenue Service prescribes by forms, instructions, or other appropriate guidance the tax returns and the claims for refund that you may use. So you should not have to go searching for your forms. All of the forms that you use and all of the forms that we will go over in this AFSP program as a whole, all of those forms are available on irs.gov, and you should be using those forms. You are required to use the forms that they prescribe. I'm still on section 10.3, and I'm still looking on limits on the practice by federal tax return preparers. And again, we just made mention of that. The first bullet point, the Internal Revenue Service prescribes the forms, instructions, or other appropriate guidance. And take a look at the second bullet point. You may represent taxpayers before the Internal Revenue Service during an examination of that tax return if you signed the tax return or claim or for a refund for the taxable year or period of which it's under examination. However, the right that they give you here under section 10.3 as a tax return preparer does not permit you to represent them regardless of the circumstances requiring the representation before an appeals officer, before a revenue officer, before counsel, similar officers, or employees of the IRS or the Treasury Department. So if it has to do with the tax return that you prepared and you signed it as the preparer, you may represent the taxpayer in front of the IRS as to the examination of that tax return. Or if it has to do with a refund for the taxable year or period under examination, you may represent the taxpayer on that matter as well. If the decision does not go the way your client wants and we have to appeal the case to the IRS appeals office, you are not allowed to represent them. At that point, they either have to represent themselves or they have to find an attorney, CPA, or an other person who may practice in front of them, in front of the IRS. And I want you to know, the appeals process with the IRS is very lengthy. We were informed directly from an appeals officer about a year ago, maybe a little longer than a year ago, that the current appeals process was 18 months before they would even look at the file that you file. So please make sure that your clients understand what your limitations are, and should they have to go that route and want to go on to an appeal, the length of time that it will take. And by the way, interest does not stop accruing during an appeals process on an examination by the IRS, of course, unless the taxpayer is found to be in the right, then the interest would stop. I wanted to highlight another little section of this part. A registered tax preparer's authorization to practice under this part does not include the authority to provide tax advice to a client or another person, except as necessary to prepare the tax return, claim of refund, or other document intended to be submitted. So let's take the example where your client comes in and says, I've sold my business. I had a small business and I've sold my business. What do I do? Now you're the tax return preparer. You can give them advice as it relates to the filing of the tax return for that year. Also, you may be able to give them advice as it relates to the sale of the business on other forms that have to be filed. There's a form that we file, it's called an asset acquisition statement, when a company is bought or sold, and both parties usually are named on it, and both parties file this statement. You are allowed to give advice to that. It's a document that has to be submitted to the Internal Revenue Service with their tax return. That document sometimes tells the IRS, this is what I paid for what I bought or sold, and this is what it was worth at the time I bought or sold it. There are tax implications to what you put on that form. And based upon what's put on that form, they'll pay more or less in taxes. Under this section, you are somewhat allowed to render some limited advice on that document because that document is being submitted to the IRS. But keep those limitations in mind as well.